Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently one of you guys have asked me to look at Tractor Supply Company. That is one of the companies that we haven't spoken about for a very long time. So I'm going to do a quick analysis on the company, and then obviously if you're really interested, make sure you do your due diligence. Before I move on, can you make sure you like the video, because that really genuinely helps the channel. Okay, if you haven't subscribed, already subscribe, join us on the Patreon account where you can get access to all the spreadsheets that I've been using and the Sharia compliant investing ebook, which is basically something I put together as a first draft, inshallah. So I will be doing another draft very soon, so I will let you know when that's ready. So the company that we're talking about today is Tractor Supply Company. This is one of the companies we have not spoken about for a very long time. This is for more rural people, so people that live in the United States rural lifestyle. Okay, anyone, the farmers, anyone that has a livestock, okay, pets, livestock, small animal products, and it says basically they sell all sorts of things basically out there, and that's the company that we're looking at today. Right, so if we go back to the top here and look at the year-to-date chart, you can see it's almost flat. It hasn't done anything last 6 months. Okay, when this thing loads up. So looking at the current earnings report that they released the last time, you can see a couple of things I want to show you. Okay, from basically Q2 of 2023, they have 31 total members. They've got some sort of a reward system, I think, so 31 million plus. Okay, new customers 5 million plus. Okay, which is quite good in terms of their overall performance. You can see gross margin of so from Q2 2022 to 2023, you could see it was slightly up, but when it comes to profit margin here, it was down a bit. Okay, so 13.5 to 13.4. when you compare the Q2 of last year 2022, but net income was up about 6%, and basically EPS or diluted EPS was actually up about 8.5%. Now let's have a look at the overall information about the company. So like I said, it's in the consumer discretionary, if I can say the word, currently trading $223, and year-to-date performance we're looking at about 190% and EPS of $10, market cap of $23 billion. So it's quite small company. It's not really huge. It's not like 100 plus. Okay, it has a wide economic moat, which is quite good, and this beta is actually quite low. PE is 23 right now, but forward PE is actually slightly lower compared to the sector. This is actually not bad, and compared to the S&P 500, that's about in line with the S&P 500. The 5-year is also in line with the 5-year average, okay, which is good. Which tells us basically it's trading about fairly valued at the moment, fair valued. Price to free cash flow, we're looking about 47. So that's one of the issues with this company, and PEG ratio is basically above 2 right now. So it seems a little bit expensive from growth side of things. Okay, although this is not a growth company, sometimes it's good to check the PEG ratio as well. Okay, but from price to free cash flow side of things, it seems a little bit expensive. Now this company does pay dividends, so that's 1.84, payout ratio of almost 40%. Latest increase was 12%, and the 5-year growth rate of 29%, which is absolutely amazing. Dividend growth streak of 12 years, and they pay you $4.12 for every share of this company that you own. Dividend safety of 68%, which is basically good, which is safe if you like. Free cash flow, they have, let's call it basically $1 billion right now, or 500 million of free cash flow right now. Free cash flow yield of 2% and free cash flow margin of just 1%. So from this side of things, it's not actually, doesn't look great. In fact, I want to double check this. I'm not sure if the 1% is actually true. Actually, free cash flow margin is about 2%, as you can see there. So it's not much of a difference to the 1% that we have here. Okay, so profit margin, we're looking at about 7.5%. Operating margins about 10%. Return on equity 55%. So this is good. So the management are doing something good, I guess. Total return in the last 10 years about 15%. Let's call it 14.5%. Return on invested capital 34%. So from this side of things, management seem to be effective. Okay, return basically in terms of revenue side of it, the growing revenue really nicely, 14%, and current ratio is above 1. So they do have enough cash to pay off any liabilities in the next 12 months. The basically Wall Street analysts are expecting about 10% growth this year, next year, and then about 8%, 9% every single year after that. Current price, as we've seen already, $223 per share, fairly valued according to Morningstar. So it's almost that price where it is right now. According to Simply Wall Street, is actually overvalued by about 15%. They're saying it's about 184 the intrinsic value of this company, and basically TipRank is actually saying it's got about 18% upside, so they're expecting the price to be $252 dollars. And when you look at the average price for Seeking Alpha, it's 200 and almost to 50, about 17%, and that is also a buy from Seeking Alpha. Business side of things, Sharia compliance side of things is 100% fine. Interest bearing debt about 18, which is a bit high, but interest bearing securities is almost non-existent. And when we look at the free cash flow, when we look at the shares outstanding, it's declining. So you get that 1+% plus the shares outstanding being bought back every single quarter, I guess. That is really a solid business. Now let's have a quick look at Seeking Alpha ratings. You can see Quant is actually saying is a hold right now. Seeking Alpha Analyst is actually saying is a hold. But like I said to you already, Wall Street is actually saying is about a buy right now. Let's look at the earnings going forward. So Quant basically yearly, so there's about 699%. So if we just basically just use the first three, that's not bad again for this type of business. 5%, 6%, 6%, 7%. So that's what you basically expected this type of business to grow every single year. They're not fast growing business, but they do pay that dividend. Okay, on top of that, you get that price appreciation. But like I said earlier, the price hasn't done anything in terms of it's flat for the year, basically year to date, and the last 6 months is actually down 3% up since the beginning of the month, and the last 5 days about 3% up. So it's gone up just the last 3 days, and more than basically it hasn't done anything since the beginning of the year. But a year to date is about 17%, and the 5 year, when you look at it, 189%. So if you had this company in your portfolio, what this means is you would be up right now 190%. So if you bought it 5 years ago and you haven't sold this stock, okay, you will be up right now 190%. And this is why we need to be a long-term investors, and we need to think about that long, basically term investment side of things. If you had it for 10 years, you will be up 263. Obviously there are stocks that have done better than this, but that is really good. Okay, basically in 5 years, if you have almost a 200% up on a stock in the 5 years, and you still get those dividends, so total basic return, you will be looking about 200 plus, which is quite nice. So there is another way to kind of value stocks and to see if they're undervalued or overvalued, and that's something Simply Save Dividends actually uses. Okay, so if you look at the dividend yield, okay, you can see the 5 year average here. So the 5 year average basically for this company is basically 1.39. Right now it's 1.84. So that means the stock looks like it's undervalued at the moment. If it's below the 5 year average, okay, so then that means the stock looks like it's more expensive. Remember, the stock price goes up, the dividend yield becomes smaller. Okay, so it goes the opposite direction. And the forward PE, okay, so the 5 year average for this company 21.3. Right now it's about that, so that's why it kind of looks like it's a fairly valued, and like I've shown you already. So there you have it. That's the company according to a couple of analysts, according to Simply Wall Street and so on. It does seem a little bit undervalued at the moment, but in my opinion, this is one of the companies I probably would need to learn more about, because remember it's consumer discretionary, so I need to know like are they the only company kind of trading in this sort of a world? Do they have, in terms of farmers, how much of, I need to know a little bit more information. I need to know who their competitors are, what the companies look like, who's basically has the market dominance and whatever. Although they do have a wide economic moat, that could just be one side of their business or whatever it is. We just need to look at that information. So you can find all of this information by going to their website and just getting a bit more a bit more details on the general company. Right, I'm going to stop the video there. If you have not liked the video already, please give it a like. It really helps the channel, and join us on the Patreon account where you get access to everything that I've always shared with you guys. Have a wonderful day. Assalamu Alaikum.